got this. Now, where do we go from here? Now, very simply, I want to talk to you about a very important level here. This is very important, right? This liquidity that we talked about, the market has already grabbed. Now, you need to see the sort of selling continuation that is going on here. We started very strong with that green. This is where you make all your money. And thereafter, you see how it retraced back to that yellow algorithm, especially on this candle. And we continued in that orange selling continuation. You see slight taper here, but let me explain this to you later. Now, as we open, you need to be very mindful about this orange, because this orange has been a very reliable selling algorithm throughout the entire range here. If we do have green, that will be a great bonus. So you look out for the green selling. This is where you need to make all your money if you're shorting this and the market allows you to short. But otherwise, look out for that orange. This orange here, very important, especially if we continue to head down here. Now, I want to talk about the very key cups that will have to close. One will be at this 586 here. We have to close this cup here if the bears want to grab more liquidity here and soak up the buyers. So either we go through in that orange, which will be ideal, or in that stronger green. If we do head down, look out for that structure here. Now, hopefully, the market grabs more liquidity and builds it along the way with that yellow algorithm here. So what you want to be looking out for will be more selling continuation and for the market to build more liquidity, especially in the range here. Now, if we want to continue heading down, you need to see 5-day moving average crossing below the 20-day moving average. First and foremost, you need to see that. And hopefully we have a retracement of that 5-day to confirm that downtrend here, while looking out for selling continuation structure at this range here before we start heading down. If the bears want to head down, I talked about a lot of this in the daily chart here, and once a month we will always retest the 20-day moving average. Just take a look. This was 2 months ago, 1 month ago, and this is on Friday, and you see it always happening. So you have to understand the market will always find some sort of parity in the averages over time, and when you understand this, you can understand where the targets are. Now, in this case, the bears, if they want to go down, the target will be clear. That will be where the bottom Bollinger is, as well as the 200-day moving average, where it's building very strong liquidity at that range right now. Now, this will be very good if we have confirmation on the 5-day trending down below the 20-day moving average, and thereafter we continue trending down with the 5-day moving average and the bottom Bollinger here. So look out for this particular trend indicator here as well. Now, take a look at the trade indicators you have to be looking out for here. If we do head down, I've already talked to you about the selling continuation structure here. Now, however, if the bulls want to rebound from here, you have to understand where the liquidity is. If we do sell here, the liquidity easily grabbed, especially 20-day moving average with that magenta and that green algorithm here. So I want you to pay close attention, especially if the bulls were to grab this liquidity at that 594 yellow, where the 20-day moving average is, and where the green and the magenta is building liquidity here. Cups have to close thereafter, so you look out for cups closing, and you will see cups closing here off to that 596, where this main green liquidity is. You look out for structure, and if we build more liquidity on the way up, there is a larger structure here with the green algorithm. So if we do have a massive reversal, you look out for the 5-day moving average and the green liquidity, and by then you would have already seen a very strong starter position with that 20-day moving average there. Otherwise, it's always ideal, just wait for cups to close, especially if you're already hedged from the top here where the upper Bollinger is. There truly is no need to be worrying about a stronger reversal. You're hedged from here. Why do you worry? You start worrying only when we start retest out of the range here, and you have several confirmations from there, isn't it? So you see your first confirmation will be when 20-day is being reclaimed, and second will be your 5-day start to reclaim. You will see magenta already building liquidity, grabbing liquidity from the magenta and green, and grabbing this larger liquidity from the green at 600, and thereafter closing the larger cup at 604 and building more liquidity before this starts heading out and breaking out from where the previous upper Bollinger is. And on the trend indicator, you would have already seen that the 20-day would have defended itself from the 5-day, and you see see bottom Bollinger continue to trend up out of that 200-day moving average. From there, you will see upper Bollinger also starting to trend up as well, building more liquidity on the way up. So you see